We are here with Chart the Markets. My name is Mark from Blundhouse Technical Analysis, and we are actually coming to you today from the Blundhouse TA Telegram group. So if you were interested in joining our Telegram group, which is free and then allows you to participate in these discussions as well, just head over to X. Go to x.com/blunt420, capital B, capital F. I know we got to work on the name, right? But head over there, and all the details that you will need are going to be in this current X post. Access to our Telegram group, and as well, a little bit of an introduction about something that we're going to be doing today because, hey, you know what? It's the holidays, right? So here's what we're going to do. There's quite a few of you that are actually using our Blundhouse script, which is great. And in order to reward you, I've put together a little program with a couple of our partner exchanges, three of them to be exact. BYDFI, Weeks or WEX or whatever they call it, however you say that, and Blowfin. And all you have to do is, if you haven't already registered an account, click on these links and register an account. And all you have to do is trade 500,000 in futures volume, and your fee for the script will be credited back to you. And you can reach out to me. I can explain how that works. It's all done through Stripe. It's not that hard, and you're trading anyways. So if you're using the script and you're not on one of these three exchanges, or if you are and you want to earn your script as it earns you money, head over here, register a new account. Is all you have to do is within the 30 days of your subscription period, we'll be able to see how much volume you've done, and if you've done the 500K, then we'll credit the script back. So you can check that out all for yourself, and I welcome any of you in the Telegram group. But let's get to some charts, because isn't that why we're here? We want to look at charts, and we want to understand what the market is telling us. And everybody gets excited as soon as there's a green candle, right? And price is just going to take off and go the other way. And what we're doing right now is looking at a daily chart of Bitcoin and what's on our chart, just to help everybody along. There's a volume profile. This little thin blue line is upper value range, lower value range. This thin red line is the point of control on the volume profile, which is this. This blue here is the most dense trading volume in there. And then anywhere you see gray is very light. And then there's the gaps. Well, the gaps is where price can shoot up and down quite quickly. And then we have some moving averages. 20, 50, 100, 200, 500 days, and 1,000 days. Now, those longer term MAs, to some people, sound a little bit ridiculous, and I get it. But because we believe everything is fractal, when we work on smaller time frames, what it does is it helps frame and arrange, and I'm sure we'll see that at some point today. This Bitcoin chart, we talked about a couple weeks ago what's going to happen to your mindset as what was once support gets challenged as resistance. And this chart here really shows how much time it takes for price to recover, or a trend to be broken, or for a level of resistance to be breached. Now, if you're not looking at this time frame, the 500-day, you're not seeing price repeatedly strike and fail these levels with pretty reasonable accuracy too. But what happens when this level of resistance can no longer be challenged? Price just doesn't have enough oomph, and it finally capitulates down to the next level. Does the process not repeat again, just at the next level of resistance? Yes, exactly. That's what happens. And we kind of talked about this a few weeks ago, that if we fail the 20 after repeated tests and fails of the 500, then the price will test that 20 MA level just as it did the one above it. Right? Break one level, find the next. And that's what's been happening repeatedly. And the concern here is what, guys? The failed breakout, right? Right like that. Strike up. Hey, that wick is often a good tell. And then you start to roll over. Now, have you completely capitulated here? No, of course not yet. Not yet. But if you do, you roll over and you take out the previous wave's low. Now, because we like to use fractal analysis, what is it? Because like price has obviously found some support here, right? So what could that be? Well, if we switch to a weekly time frame, lo and behold, what do we see? A 100-day. The 100-day moving average on the weekly chart. Price will always be finding something. Not always do we find what that is, but it'll always be finding something that it will find support and resistance at. We can count on that. And we've talked about this, like if you just focus on the chart, especially right now the longer time frames, when I say longer, I'm talking weekly and even monthlies in some cases, because they're going to take out all the noise, all the drama that we see even in daily trading. They're going to filter that out a little bit just with time alone. And does this move down on Bitcoin? Does it seem dramatic? Does it seem... It seems pretty clean. But on the daily, it's not quite so. And we know that when we break one level, we find the next, and when we break that level, we find the next. And when you reach these levels, let's look at this move to the downside. What do we expect? It's the first touch, so you expect a pause or a bounce. And we're getting the pause, but we haven't gotten the bounce. At least not yet, anyways. And what are we looking for on this weekly chart that we need to be concerned about? Because we have three choices for price: up, down, and sideways. That's always the drill. This is kind of sideways. So, we could continue to do that. That's fine. I get it. Or maybe we had higher. But how high and where? Well, if you were to break out, you would have, in order for this trend to change in a meaningful way, you have to have your 5 start to kick up through your T line, which is the ADMA. It's one of the simplest things we can use to measure trend. And that's what's helping our our signals fire on any time frame. And then in the background, there are some other parameters that are filtering out false signals, or trying to. But this is pretty clean. Like even if you waited for that candle on the week of the 13th of October, if you entered there, are you willing to wait to see if you actually break down here? Probably. The fact of the matter is you bought yourself time and you bought yourself a little elbow room. Right? And it's that elbow room that will help take the stress out of the trade later on, because the elbow room is created by getting a good entry. And that's what the script helps us do. It helps us get good entries on whatever time frame we're looking at. And in this case, here we are, wick of that 100 weekly. There's your upper value range. All of this is light volume, which explains perhaps why this could move down so quickly, because this is essentially a gap in light trading. not an accident that I found a major moving average and that upper value range as a level of support. And you can see what happens as you test these levels of support more frequently. You ultimately increase the probability of a failure, and that's what happened here. Right? So here we are getting our first touch support, at least, from the 100 MA. But if you kind of break into this gap area, what happens? Now we show this every week, twice a week, right? You get into these gaps and price can shoot up and down quite quickly. And the reason that happens, again, is because there's just not a lot of substance in those big parabolic candles like these that were pushing price higher in the first place to hold price up when it gets challenged on the way down. Everybody likes to look at them on the way up, but nobody wants to talk about what those retests look like through that kind of upward momentum. And the same applies. We could invert the chart, and the same would apply. These are huge opportunities for traders. So break down, fall into that gap. What does current price look for? Past price. Sometimes you find it in major moving averages, like the 200 moving average here on the weekly chart. Or you find it in benches of past price, where buyers and sellers have shaken hands in the past. In other words, time and price have the opportunity to come together in this range in here on the weekly chart, 58.5 to 65.3. And we just dropped that in here 1 week in our stream, just quickly trying to identify a range. And what you can see is this shelf. So you see this indent in the volume profile to the right? Well, that shelf is created by that past price. And because there's so much of it at that level, it increases the likelihood of price being drawn to it. Now again, nothing goes straight up. You could have this move down, a move sideways and a kick higher, or a move down this sideways and then the move down continues, which I think is more likely. But even if you move higher, is that the first test of the 50? Yes. Is that the first test of the 20? Yes. So there's a very strong probability that you would fail at those levels, retest this, the 100, which now it would not be the first test, and that could be the one that breaks. But for anyone that thinks it's unusual that that price find the 200-day moving average on the weekly, it is absolutely not. Like, it's completely normal. So don't be weirded out if it was to happen. It's not unusual. You can expect it. Time and price will come together. Will this big gap in volume and this bench of past price to the left and the 200-day moving average, which is our basic bull bear indicator, will that be a draw for past price? Absolutely. And these are the things that we use, the tools that are in our toolbox that will help us understand where price is going, or potentially going. That's all we're doing. There's no magic, nothing like that. All we're doing is following the chart. You don't have to be a martyr in front run, right? This isn't about front running, it's about following. And we can do that with confidence because our script indicator is giving us the signals that we need to make safe, profitable entries. Right? This is the insurance we paid at the very top here to make sure that we got a safe entry on this weekly chart. And these green candles is all they are green candles in a downtrend, because we have the ability to monitor trend. Right? Now, people will tell you that price is everything, and that is true, right? I completely believe that, price dictates all. But what else is really, really, really important? Trend. Right? Price is important, absolutely. But so is trend. And if you can combine the ability to effectively read price and effectively read trend, the chances of you getting hit by something you didn't see coming are dramatically reduced. Dramatically reduced. And this is just an example. Let's look at the ETH weekly chart. Could use a Bitcoin chart for that matter, but nevertheless, here's your entry candle. And you can see, obviously, what the candles tell us. But the ability to read trend is really quite important. Because when you take that away, we're just looking at candlesticks. And yeah, there's some pattern there and so on and so forth. But this is a language. Mathematics is a language. What we're doing is based on mathematics, so I believe it is a language unto itself. The chart's always talking to us. We just have to learn how to interpret what it's saying. Right? That's really what candlesticks do, right? They help us interpret what price action is telling us. Well, that's not the only mechanism we have to do that. When we add the ability to use trend in combination with price, you're going to make fewer mistakes. Right? That's what we're trying to, we're not giving financial advice here. We're just trying to teach you how to read price on a chart. That's all. No one's going to be able to take that away from you. And it's up to you to do with it, as you see fit, which could be everything and nothing. That's up to you. But you can't say you didn't have an opportunity. Price is moving down. Sure. What do these green candles mean? Should I be worried? I don't know. Should I be worried? 3 green soldiers. Okay, you're failing the 50, so that's a little clue there, right? But wouldn't it be nice if you had a way to tell what the trend was doing, what the market was telling you? And that's what this mechanism is doing for us. All of this divergence is telling you the market's still going down. These green candles aren't changing the market's mind on the direction that it should be going. This is as close to a gravestone doji as you're probably ever going to see, which fails the 50-day moving average. While you are under a confirmed sell signal and you have the market confirming that you are in a downtrend. Does this not look like it might be the failed breakout that we see all the time? Price comes back to take out the previous wave's low. Why is that hard to believe? And look what's happening. See this here? This big gap? And the point of control? And the 200 MA. Right? We've talked about this for a while. So it's no secret that I believe you're coming back to $2,500. Because the point of control, the 200 MA, and this gap is going to make it really hard for price to stay away from there. And you can see the momentum by the divergence in these levels. That's all momentum down. And yeah, if you're brave enough to look south of the 200, that's the risk on the chart. The risk on the chart was failing the 50 at one point. Well, it did that. Break one level. In this case, you broke 2 levels at once. Find the next. It's as simple or as complicated as that. And once we have an understanding of how price behaves when it meets support and resistance, makes it a whole lot easier. It's going to make it hard to stay away from that $2,500 level because of that point of control and the 200 MA. But very rarely do you see on the daily and the weekly those levels get consistent. Look at all of this in here. See all of this? I believe this is the bench. This here and this here is the bench. You know what? Let's just have some fun. Looking for rectangle. We're just, this is just quick and dirty, right? Like we're not, is all I'm trying to do here with this is demonstrate this past price to you in the event of a failure of what you see here is the 1,000 day moving average. So Ethereum is being supported by the 1,000 day moving average. You can see it back here as well. All within this level. I could have taken this even farther back. So what that means is that because we've broken here on the daily, this is the 500 day, the pink, and there's the 50. We've broken the most current, which is the 500. We failed one level. We're looking for the next level. This gap here, and this is the lower value range, make it very much in play. So the low end of that range is around 2,200, and then you've got, 26, 27, somewhere up there as well. And is all I'm trying to do is, again, capture these consolidated benches of past price. It's money, right? So money will be attracted to money. In the event that it can't find any support from MAs, it's going to look for past price, and it's hoping to sit on a bench. So we'll just keep this here and see where we go. And I think this kind of flips over to the weekly too. So you can see what we're just averaging out. All right, so we'll see how close it gets. But right in the heart of that, I don't see how we don't find it. But this is why fractal analysis works, right? Because we're using fibs, fractals, and filters. Those are basically the tools that we're using to interpret what the market's telling us. And just to give us a quick dirty example, let's take this as this is BNB, and this is a weekly chart. I'm taking this as a swing low and not this the swing high. And then we can argue all day long if it should be down here or whatever, but it's close enough. You broke through 50%. You broke the 20-day moving average. You broke 618. You're about to find the 50 at 0.76 on the fib scale, which, for all intents and purposes, is a complete and total round trip, right? This is why, so if you're a trader, why do we like fib levels? Because, look, if you're short from up here, just as an example, you're going to be targeting those levels, right, on the way down. Or at least that's what I do. So you'd be looking at 0.5, waiting for to see if it gets support or not. Right? And when it doesn't, you're going to say, okay, maybe 618, and you can see the 20 there. Well, it doesn't get support there either, which means it's looking for the 50, and you just are able to stay in your short, either take profits, add to your, however you want to structure it. At the end of the day, you are in the driver's seat that way. Again, getting good entries is really, really important. Really, really important. Did anybody think that you would pull, that's a daily. Did anybody think that would happen? No. But while everybody was kind of navel gazing and talking amongst themselves on why they believe whatever was happening, you would just be watching price. That's an obvious top, right? Take these candles off for 1 second. That's about a murdery looking top as you're gonna see. And that's what I love about these little, these shorter MAs, is that they can, because they respond quick to price, they pick up stuff that we also see in candles and other forms of price measurement, right? Because they're showing up and reacting quite quickly on a shorter time frame to drastic, ups and downs of price. But when you see this, that's, I don't recall in the amount of time I've been doing this that when I've seen that it never produced what you would expect. But as this was an obvious top, you would just be going through this going, hey, broke one level, guess we're going to find the next. And then it's the process of test and fail, or test and break through, right? But that's not what was happening. Here's the 50. Is the 50 a big problem for me when you break it? Sure. Why? Because it's the ice. That's why it's ice blue. Fall through the ice, you got a problem. Break through the ice, that's the reverse. But failing the 50 is usually a cue that there's a bigger problem. And for the longest time, you're trading above everything, and you will always, always, always come back and test those levels. Time and price will come together, no matter how irrational it may seem, because price went up so dramatically. And this is an example of that. Here we are, now below the 200, which is your basic bull-bear indicator, right? And it's not really giving us a very positive look. What happened on the 4 hour? It's just a continued fail of the 200 MA red. That's what that is. And now you've got, the 100 in there too. And this is what happens when you break all of that support and it now becomes resistance. Not everything is V-shaped from the bottom up. This is a lot of work to do. A lot of work. And the 4 hours is the one that kind of gives us the little clues on what we may expect on the daily. Sometimes we see the daily chart looking like it wants to move forward. But the 4 hour is telling you something different, right? You'd be seeing the 4 hour breakdown in these earlier candles. And on Bitcoin, I believe, because I think we talked about this quite, how, what we were looking for last week is, hey, will this move here? These three green candles towards the bottom in the middle of your screen, will they change trend? Right? Well, we saw how we got a good entry on the 4 hour, and you're hoping that that good entry translates itself onto the daily, and then you get the same effect on the daily, and by that time you're into a runner, right? Wanting to challenge at least these levels up here, get into this gap to the upside, and so on. Knowing that this 20 was going to be our resistance level, just like the 500 was. And now the 20 is treating price just like the 500 did. Right? So we're not out of the woods yet. You have to break one level, and then you have to find the next. It's just a process. And sometimes that process takes more time than you would personally like, but it's still a process. It's just a process of current price looking for past price and how price reacts at support and resistance levels on the way there. That's simple. Again, simple or as complicated as that. Now, let's go back to the daily gold chart. Does that look like a bullish chart to you? It sure does. It does to me. But I thought gold was supposed to be done, right? I thought you guys said gold was dead. We heard a whole bunch of people telling me that. But the fact of the matter is, that's not what the chart said. The chart said you could have bought gold in June and watch it go nowhere but up. That's on the weekly. This chart should be in a textbook for me. All that stuff, and this can happen on small time frames too. All these averages twist together, price moves up, they start to fan out. Now you've got metrics to monitor price in. Look how it loves the 50. Continuations off the 50. You know, a couple weeks ago, everybody was saying this was all over, right? This wick is what they were concerned about. Oh, that's a sign. That's it. All done. Sell your gold. Don't be the last one out. What did the chart say? The chart says as long as this divergence is intact and you're trading above these levels, you stay in the trade, man. Don't worry about what somebody says that you know or don't know, who may or may not know what they're talking about. Just follow the chart. The chart's going to tell you. Why? Because it picks up the fingerprints of money. It's a real-time representation of what money is doing, not what people are saying. I don't care what people say. I'm interested because I like to learn. Have all day long for that. But at the end of the day, it's only what price does that matters. Price was telling us that it has the support of pretty much everything and wants to go higher. Look at this kiss of the 20 MA, boom, price goes higher. Same thing, kiss here, boom. Here's the 200. It's about as textbook as you're going to get. Now you're probably looking at this thing saying, well, there's going to come a time, if what you say is true, that all of this will get retested to the downside, and you're 100% right. That is exactly what will happen. When that's going to happen, I don't know. Pretty sure it's not going to be tomorrow, or the day after that, or the day after that, at this rate. But what would the chart have to do to reverse? Well, we already know. Right? This chart has to do what this chart did. To come back and check all of the levels on the way down. And one day that will happen. Right? It just doesn't look like it's today. Because this is still a very bullish chart. And all these, look at your MACD, above zero. This is the daily. Well above zero and moving higher. Fisher transform well above zero, moving higher. Same with the stochastic RSI. There's still gas in the tank for gold. This is what everybody was telling you was the end of the world. Right? Up here. Remember? Didn't even get to the 50 on that wave. But the chart told you that you're going to take a little bit of a pause, which it did. Right? It was obvious there was a little bit of a sell-off, but nothing like the sky is falling that the narrative was. And then price kicked up higher again. And then as it got to this point up here, everybody was saying what? Oh, gold's double topping. Right? It went from, a few weeks before, a month before, to the sky's falling, to, well, now it's a double top. But what were we talking about in here? Price is bullish. It's getting support. It's looking to do what? Take out the previous wave's highs. And that's what it's done. Just like on the way down, it looks to take out the previous wave's lows. Come back to those levels. Sometimes those create support, price moves higher. Sometimes they don't. But the chart will tell you, and it did. And as you're going through these types of waves, you're looking to see where your support is, as price kind of does that ebb and flow. But this did exactly what we suggested it was going to do. If it did move higher, three choices, up, down, and sideways, if it was moving higher, it was going to look to take out the previous wave's highs, and that's what it did. Right? It's really not a surprise. We know with reasonable certainty where things are going to go. Right? We really do. Now, if we look at a chart for oil, and I'm going to use a monthly because the last few days have been kind of bullish for the price of oil. But let's look at it on a longer time frame, because we need to see from a grander scale what the market's telling us. This is the current month's candle. Is all this candle did was wick literally to the penny the 5 EMA and pulled back. And as of the 23rd of December, with a whole bunch of downtime worked into there's not a lot of time for it to change trend anyways. Not this month. So this current candle on the monthly chart just simply wicks the 5 EMA in an effort to break out and pulls right back. That's bearish. This divergence that you see between the T line and the 5 EMA is telling you what? That price is still bearish. So here's our ability to read what price is doing, right? Should I be afraid of these 3 green candles? No. Why? Because we have the ability to understand trend, right? Price is important, absolutely. But having the ability to combine that understanding with the ability to understand what the trend is twice as potent. Because a lot of people will make mistakes, right? A lot of your friends will make mistakes. This could be Bitcoin. Oh, well, we're breaking out. That's it. What happened? How many times have you seen this? This is our failed breakout on a monthly chart that came back to do what? Take out the previous wave's lows. Over again, rinse, repeat. Time and time again. Right now, we were really calling this up here back in September of 23 because we didn't see what everybody else did, even at $90 or whatever that was. Where we had the 6166 number, which we've taken out, and prices partied here quite frequently. Why is that? Well, because it picks up past price. It was a level that picked up a bench of past price from years gone by, and yeah, it's relevant, right? So here's our weekly candle. Little doji on the monthly, right? But here's the weekly candle, and this weekly candle, as of yet, hasn't broken through the T line. Hasn't been able to close the gap in the divergence between these two levels, which tells us what? The trend is still intact. Is this a green candle? Yes. Has it changed trend? No. Why is that important? Because this is why. So that you can understand that these are just green candles in a downtrend, right? Having the ability to understand that helps you keep you out of the lion's den. And because we believe in fractal analysis, this is a quarterly chart of oil. The same chart that we just showed you on the monthly and the daily. And this is that, that little box that we dropped in there that you saw on the monthly. Here it is on the quarterly. So on that monthly chart, you saw the 500 MA cut right through the middle of this level. right? Because I'm saying, hey, that's a draw for price, right? Break one level, find the next. Nothing goes straight up, nothing goes straight down, but once you've broken one, that puts the next level down in play. And that's kind of what's happening here. Have we seen this level before? Yep. So let's not be surprised if we come back and see it again, as unlikely and as irrational as it may feel for some people. But if we believe that in our rationale on how price moves, in that this level on the monthly really does validate where things may want to go. It's not irrational for price on any time frame to come back to the 200-day. It's a matter of time and price moving together, not just one in isolation. So there's a quarterly chart of the 200, how price has treated it, right? And probably again. When? I don't know. Because all I know is that even on this quarterly chart, you were told to go short on the quarterly chart back in July of 24. And could have been in well sooner, well before that. But the bottom line is, this is still bearish. So the quarterly's bearish, monthly's bearish, weekly's bearish. Those are the time frames that matter for trend, right? The daily is the one that bops around all over the place. So here's our daily. First, there's a little buy signal on the daily. But how much work do we have to go through? Well, those other two time frames that we just showed are a testament to that. You have to test the 50 again. And, you can see that's been a problem, right? But if you break through it, what happens? Well, you look for the next level up, right? That's how reversals are created. They start on the smaller time frames, but they don't always materialize into what we think. But yes, that's a buy signal, that's a target, that's a target, that's a target, and so on and so on. And yes, one day oil will finish its move to the downside, and it will start to move higher. And when it does, you want to be able to monetize that chart. And what you'd be looking for, and what I've been kind of spending a little time doing myself, is looking for charts where I get monthly buy signals. Obviously, understanding that the intention is to be in that trade for a lot longer than a few days. But they're out there. And sometimes they have a tendency to run. Right? You'll find a lot of these monthlies that have been flat produce a buy signal, and lo and behold, it's 2 years later and you haven't seen a sell signal since on that time frame. So Bitcoin got everybody excited a little while ago, and it's starting to fade again. Right? This is the kind of daily drama that you go through. Ultimately, I believe we're looking to take out these lows. Once we do, well then, we just go through the same process of trying to figure out what comes next. We have another level below us. So that's going to be a draw for price, and then you got all this. Let's look at, just to give you an example of, you guys remember this? Let me go to the weekly, it'll take a little noise out. This is Master, or Strategy, or whatever the heck they call themselves today. Right now, these little extremely talented representations of art have been on here for quite a while to demonstrate to this group that that's what we're looking for. And we did that quite some time ago. I don't remember when. Right? Probably when we started this breakdown. There's your sell signal. This is the insurance you paid to get a safe entry. In hindsight, you go, oh, I could have bought the top. No, in hindsight, the market was figuring out what it wanted to do until it gave you a safe signal. Right? So when you see that, is all you know is that you're trading above everything on this time frame. and everything to the downside is your opportunity. And that's kind of what happened here. You broke one level, you found the next. Look at this. Right? This divergence stayed intact to the downside. This candle here and this big red candle that actually tested the 20. The market, this is why having the ability to read trend is just as important as having the ability to read price. We were being told that this was still a downtrend with momentum. Right? So you fail the 20, find the 50, fail the 50, find the 100, fail the 100. We're looking for the 200. Now they don't always happen this quickly, this smoothly. Sometimes you have, you know, more up and down price movement, right? But not here. Ultimately, the end result was going to be the same. And what we were trying to demonstrate is that price will be looking for the 200 MA, which is why we drew this line. And that 200 MA lines up with this bench of past price. In the event of not being able to find support from your MAs, price will be looking for a bench to sit on. And that's what this is. And that's what it's finding. Right? This isn't rocket science or anything like that. It's not that hard. Is all you're doing is just following the chart. That's it. You know, I have MAs on here to try and identify these areas of support and resistance, but really, if you wanted to, you could take everything off, right? Everything. I'll leave that on. You could take off everything and then just follow, right? And of course, unless this trend was to change and price was continuing to fall, you would instinctively have your eyes on this level. And here we are. Just price doing what price does. And as human beings, we have this amazing ability to overcomplicate every single thing we do. Right? We do. And is all we're trying to do in here is give you a handful of tools that you can use to keep you out of trouble and to keep you on the right side of a trade. So if you're trying to long in here, hopefully you'll look at this differently now. You can't long anywhere in here. As long as this is happening, stay short or get out of the way. You don't have to be the one to catch falling knives. And this is exactly what these are. And I can promise you that for every one of these falling knives, there's someone out there telling you to catch it. Oh, price will never be this low again. Price will never be this low again. Oh, right here, price will never be low here, never be lower again. Oh yeah? Well, why don't you shut up and watch what you see here? Plug your ears so that you don't hear that nonsense and just follow what price is doing. Now that you understand the ebb and flow of how it moves and how quickly it can move through these gaps. Why was this volume gap created on MSTR's chart? It was created because of this. This here. So whenever you see this kind of price action, understand that it's creating a massive gap on the volume profile. And at some point in time, when you come back and test that, there's nothing there to hold price up, because these things are just pretty. And nobody cares when price is going up, right? Everyone's just clapping their hands like a bunch of trained seals, which is fine. Go ahead. But if you don't recognize what happens on the other side of this, you're missing an opportunity to monetize the chart. And that's really what this is all about, monetizing the chart. Right? It's not about falling in love with four-letter symbols or idolizing people that associate themselves with four-letter symbols. Who cares? Really? Like, how old are we? Right? Come on. Current price is going to revisit past price, and as long as the trend is intact, get the hell out of the way. Or get on side. Right? What was the saying? There's no crying in baseball? Well, there's no crying in TA. You're told what's going on. The question is, do you have the ability or the willingness to look at what price is doing? This is NVIDIA. Right? And the great thing about this is like being a weatherman, right? Like you're right until the wind blows hard enough and changes the trend. It's sunny until it rains. Well, price is going up until it goes down. It doesn't make you right or wrong or, invalidate a thesis. It's just what price does. This big pullback in March, tag the 100 MA and bounces. Blows through the 50, gives you a signal. This is the sorting itself out, paying the insurance. What are we going to do? I'm not sure. Now I am. And price just moved higher. This pullback on the weekly did not, at least not yet anyways, has it found the 50 on the weekly. Up, down, and sideways are your options. So what do we have here? This could end up just being a situation where we're either going to have 2 equal points in price, or price just bounces here at the 20 and marches on and takes out the previous wave's high, just like it did on one of the previous charts we looked at on gold. And actually, this chart doesn't look too different, does it, now that I look at it? But nevertheless, that's what we can expect. If this continues to push higher, price will be looking to eventually take out the previous wave's high. But when it comes down, you have a clearer vision of where price would go and paying attention to these gaps. These are money for you guys. They absolutely are. Whether you're long or short, trading in and out of those things is to your advantage. Let's look at, I'm sorry, I went right by it, XRP. Where are you? Here we go. This is the weekly XRP chart. When we've talked about this chart, I know there's a lot of people that love this asset, and that's great. There's a lot of people that love every asset. But I mean, when you have this kind of clean divergence to the downside, and your 5 EMA in this case being solid red, which tells you that's continuous selling, right? There's no pausing in that selling. There's not an influx of money turning it from red to white or anything like that. This has just been selling the whole time. Even this green candle, right? So many people thought, we dipped so deep, but then we came back, we found the 50, and then the next week's candle was green. I think we're good to go. Really? No, you're not. What's the chart telling you? The market, I shouldn't say that. The market is telling you that the momentum is still to the downside, because that divergence is in place. So you broke one level and you found the next, but the trend, although you're getting a little bit of a pause, right? But the trend is still down. So this is a big impulse down and just basically moving sideways, testing and failing the 2 levels that we use as a metric to determine whether or not price might be starting to break out, right? And it fails them both and then just ends up sitting on the 50. And we know the risk of, failing the 50. That's the ice. Did we not know that was a strong probability? Of course we did, because again, the chart was telling us that was in play, and it still is. And I've been asked many times about this chart, and was it, why would it not just keep on plugging? Well, I don't know the reasons why, nor do I care. I'm not interested either. All I'm interested in and focused on is what we see on the chart, because that's the only thing telling you the truth. is the price on a chart and the trend that it's trading in. And we're just trying to make it dead ass simple for you to trade whatever you want. Right? This is a 4-hour time frame. You don't have to trade the longer time frames. Trade 4 hours, whatever you want, I don't care. But don't be stupid about it. Right? Don't use too much leverage, which a lot of people end up doing. Understand what certain levels you can expect to happen at certain levels. So for example, on this 4-hour XRP chart, that lower level of thin blue line is the lower value range, right, on the volume profile. We know what happens if we can get north of it into this gap with the 200 and the POC up there. That's a target, right? Well, when you see the 50 sloping down and, you can't really hold a body above the 50 and you keep wicking out at the top, is that not a little bit of a clue that maybe failing that POC level is probably what's happening? Yeah. And you don't have to guess, right? This is the insurance. This is the meat, right? This is the insurance. This is the meat. You're really not guessing. You're just following. Look at this doji at resistance after a leg up. Little things like that. You just have to pay attention. It's not a bullish candle. This level on the XRP chart, these two levels, 161 and 190, we dropped in there. Why? Simply because you had the base of these candles, you got the wick in here, and then this lower wick down here. That's basically all we went off of. Here you see it on the daily. And is all we were trying to do is frame in a next range. Just like, we kind of picked up this 215 level. Why did we identify that level in here as a possibility when price was moving down? Because of this. Because price will look for past price. And again, when it finds it, it doesn't necessarily means that it holds that level, right? If it doesn't, it's going to continue to look for the next level down. And that's what you're seeing on XRP chart right now. 3 green candles, nothing but a failure. Did the trend change? No. Wicked out at resistance, close, this is, what do you need to know? Just follow. Right? Well, don't you think that when the government does this and they start doing this with, I don't know. I have absolutely you just scrambled my egg. Like, I have no idea, right? I'm not in the room. I don't know. All I know is that I just follow what money does, not what people say. All that other stuff is just bullshit. Sometimes it's meaningful bullshit, but it's just bullshit. What's price doing? I can have a feeling on what I think is going to go on in the world, and I look at the chart and it might be completely different. It's the chart that really matters. Information's great, learn lots from credible people, which I like to try and do, but ultimately, learning how to read price on a chart will give you one of the mechanisms that a lot of other people don't have, and that's the ability to see through all of the noise. And that noise is all of the stuff that we talk about that blurs our vision. Right? Blurs our perspective. Gets in your head and starts to second guess yourself. Price ultimately will just tell us, the chart will tell us what it wants to do. This is the D-wave chart. Right? Pulled back to, we actually pasted this level perfectly on here. But support from the 100, that's great. Break through the 50, that's a good sign. So you get a buy signal on the 22nd of December, which is back in here. And on the 4 hour, we got it where? On the 19th. This is how you can use the 4 hour to pick up a little bit of a cheater entry on what might you hope you see on a daily. And look at, you kind of breaking through the 200 and breaking through the 50 on this 4 hour. That's that's a bullish thing, right? That's my takeaway, would be bullish there. Got a little bit ahead of itself in this 4 hour candle. Little Batman ear gap there for you. And your next candle pulls back, but it finds support at the 5 EMA. And that's what you're hoping for, right? You're hoping that it finds some support in here. And this is just kind of a retest or a tag up before it takes a run at this again. But it doesn't matter the time frame. All of the process that we go through is the same. This is the weekly chart. This week you're getting this buy signal. You don't have to take them, right? That's up to you. Like, everyone trades a little bit differently. But this is starting to shape up to look like a continuation, right? And if it is, well, we have up, down, and sideways as our choices. It's going to look for the previous way as highs. If it breaks down, which, in other words, if it kind of fails the 20 here, where it's gotten this a lot of love from, then it's going to look for the 50 and somewhere in this past price to the left. And you can see the shelf is where price would sit on. Up on a shelf, candle on a shelf. There's a gap kind of sitting in here is the 50 as well. So you have to be careful on this chart because there is downside risk, but the upside is this is a continuation, and then you start to look for those highs. And this kind of looks like the Bitcoin chart in so many ways. Let's look at Monero. There we go. So this is the daily. And when you start, guys, when you start to see yourself trading above the 20, above the 50, and all, like, everything is below you, that's wonderful. That's bullish. And hopefully you come back and you tag and you get support from expected places like it has here. But just know that at some point, because you've tested the 20 and the 50 so many times, and you've even tested well, not quite tested the 100 anyways, but you've tested these two several times. So the probability goes up considerably when you come back to test them again. So just remember, if you're looking at the Monero daily chart and you start to see it test this level, hang on to see if it catches. If it doesn't, it's going to move down, test the next level. And my fear would be that it doesn't hold the 50 this time, because it's hit it several times before, fails it at the upper value range and falls into this gap below. That's the downside risk on this chart. Upside, you get a continuation move again, and the beat goes on. And you're going to use, because we do fractals, right? You're going to look at the longer time frame to see again what is the up, down, and sideways possibility on this time frame. Well, the downside, you start to come back and you fail the T line. With enough momentum, you change trend and you come back to visit the 20. And if you don't hold it, you'll come back and retest the 50. And it just gives you an idea, like, hey, where's the 20 on the weekly? 346. Where's that on the daily? Yikes. 346 is in here. Basically, kind of in this gap. So these are the things you have to kind of layer onto your analysis over time to see, hey, am I exposing myself to a lot of risk here? maybe it's time we take profits or some, like you don't have to sell everything. But I mean, you do have to manage these things. Look onto the longer time, look onto the longer time frame. This is the monthly. Like, wow. There's there's the 20 at 250 and the T line at 346, which is exactly the same number as the 20 was on the weekly. So this monthly candle, is this not kind of doji-ish at the top of a bull run? And look when this thing gave you a signal back in June of 24. So you literally just could have, this is another example of picking up these buy signals on the long-term charts. Look, that's, again, putting your feet up for a month and a half. And technically, we're still bullish, right? But that's when you would have got in at around 138 bucks. And you're trading at 443. Downside risk, you come back to these levels. Break it, there's the 20. Like, this is, a lot of these charts have a lot of scary downside risk. Let's look at SPY, or SPX actually. Let's go to a daily. Yeah, this is the definition of obviously a bullish chart. There's the weekly. Wow, like look at this. There's your big hit off the 200, another hit off the 200, another hit off the 200. Like even if this thing was to pull back to the 200 and bounced and start the process of, taking out previous levels, like this is a monster chart. An absolute monster chart. Stretch it out to the monthly and look at, it just keeps, you can see like continuation. Again, we're going to come back and check these levels, and when we do, this is what everybody has to hang on for. This is literally like being at the top of the roller coaster or approaching the top of the roller coaster with the anticipation of what happens next when you get to the top. That's kind of what this feels like. And you can only insulate and pump the narrative or promote the narrative of a healthy economy until everybody figures out that it's not true. And I think that's what's going to happen. Like, we're due for something anyways, but I mean, this is just ridiculous. And I don't mean to be negative, or a bear, that's not the point. I don't think enough people are looking over their shoulders to see what could potentially happen next. And part of what we want to do is make sure that people don't get hit by something they didn't see coming. And that's why we're looking at these charts from a fractal perspective. That's it. But wow, these are very healthy charts. Are we starting to look like this might be a level? Yeah, but this is the upper value range up here, so it's not uncommon for price to kick up above it, just or below it, like you see here, and do some trading. So, top-ish, yeah, top totally. Probably not. Right? The weekly chart is telling us, just by this divergence alone, which I believe in, still telling us this is a bullish chart, and it is until it isn't. But right now, that's exactly what it is. So we'll look at Aster really quick, because this is something that, again, charts don't lie. The chart has been telling us how it feels, or the market is telling us how it feels. Is this I think it's a decentralized exchange. Not even sure what it is, but I'm sure that they put a decent product out. Like, I'm sure it's not terrible, but for whatever reason, the chart sold off. And this is a weekly chart, so probably not fair, but my God, like, look, now that you can read the T-line and the 5 EMA, this thing has still not been able to catch a level. And because this giant ass candle is probably filled with fairy dust and air, right? What does that mean? It means that there's really nothing here to hold it up. I'm trying to find a volume profile, and it'll take a time frame to bring it in. This might do it. There we go. There's a 4 hour. So eventually, this is a failed breakout, and we've come back, and I think we're going to take out this previous wave's low. Actually, we already have. But I mean, this is a 4 hour, and it's still bearish. As long as you have trading that's below these levels, didn't even give you a buy signal when it moved up. But I mean, this is still in a downtrend. You can't, you don't want to be on the wrong side of these trades. Right? You don't want to be long into resistance. You don't want to be long fighting momentum. Do you want to be short here? Absolutely. And you're going to say to yourself, well, you know, I missed the move. I missed the move. Well, no, you didn't. Right? So this is a great example. We talk about this all the time. Right? Here we are. Impulse down, sideways back to the T-line or the 5 EMA, but we have all of this divergence still in place. Price continues. Right? That's just a green candle in a downtrend. That's a green candle in a downtrend. This sideways stuff is a huge clue. But I mean, the chart was telling you what was really going on. And you know, every chart's going to have a different time frame that will give you the look that makes you feel comfortable. I often find the 4 hours do that. You know, this is an example of a real clean read, right? What do we know about the 50-day moving average? Right? That's the ice. And it's a real solid test for price. So here you have a test and fail. Test and fail again, test and fail again. Test and fail again. See how this framed out went sideways? Right? Boom. You don't have to front run. You don't have to be guessing. You just don't. Pick a time frame that feels comfortable. I like the 4 hour chart because it does give me little cheater entries onto the daily, but that would apply if you were looking at the 4 hour as your primary time frame, and then working it back to a 1 or 2 hour, however you decide to do it. Same kind of thing. Just looking for a little bit of a clue that price might be changing and giving you an opportunity to monetize the chart. That's all this is, right? Monetizing the chart. Pick the time frame that you want to do it over. Maybe you only want to trade monthly charts and you don't want to look at anything until you get an alert telling you that you should. That's fine. We can do that. If you like to trade frequently, you can do that too. This is a chart that we've showed you in the stream many times before. It's called Zano. And pretty cool what they can do, but it really is another testament to when the market wants to sell something, it's gonna tell you that it wants to sell off, right? And that's what was happening here. We were trading above everything, and then this big red candle starts breaking, and then you start breaking everything. Break one level, find the next level. Big green candle, oh, we're saved. But what happened? No. Trend was telling you it was still down, and it has been. And I know I had a target of around, at the time, it was like $9. Well, we're below $9. But just because it hit my target doesn't mean I automatically executed a buy. We want to make sure, this could be IBM, it doesn't matter what you're trading. As long as this is the case, there's nothing for you to long here unless you're looking for scalps. But like, the trend is your friend, and the trend is obviously down. So most people can understand the candlesticks, but what about the trend? Well, we give you the mechanism to balance the both. Balance both of them. trend and price. Price is going down, trend is going down, you stay short. Price moves up but doesn't break the levels that we use as metrics to determine trend, stay short. It's not that hard. Just takes a little bit of discipline and a little bit of learn by doing, right? As most good things do. You got to do it, right? You got to get in the weeds. You got to get your hands dirty to understand what it feels like. Now, that was a noisy daily chart, wasn't it? It was. Shut the weekly's a little noisy for that matter. But I mean, do we not find the expected levels? Sure we do. Probably waiting. That's the 100 MA weekly. Well, is the divergence down? Open? Still? Yeah, absolutely. Is there a huge gap here between price, the 50, the T-line, and 5 EMA? Yes. So what would you be hoping for? You're hoping for a snapback at the very least to test the 5 or the T-line or the 50 in this case in here as well. Or maybe like on the previous chart we showed where price had the impulse down and then you went sideways and then the downtrend continued. That's also a possibility, right? It's the up, down, and sideways. So one potential is you get a bounce in and around here. You snap back up to test these levels with the hope that this is your ultimate bottom for this wave, and then you start testing the 20 again and then look to take out the previous wave's highs, right? Sideways, well, you can see why it would want to go sideways in here. It's the bench. Downside is you break this level, don't hold it, and then that's a whole other thing. You start looking to the left for levels down that it will, if this is the breakout, it's going to want to take out a previous wave's low. That would probably be those two skis here, these two train tracks. But it's just pretty clean. The market's still telling you it's down, right? And that's why we do this, because, hey, listen, you could have a target at the 20 to buy it, and you would have hit it, and you would have bought it. And then price pulls back even farther. And this is the point where you tell yourself that you're dollar cost averaging. You literally convinced yourself of that, when what you're actually doing is catching a falling knife from my point of view. Just wait till the damn thing is done. This has been one of my ultimate frustrations with with this stuff, is just watching people, because they can't control themselves, to just want to jump in to something knowing full well what the market is telling them, and that is the trend is down. But they can't help themselves. Oh, this is the low, this is the low, this is the low. No. And it's not, don't chase things down to the bottom. If you want to add to a short in a case like this, sure, let's talk about that. But don't be buying down here. Just bloody well wait till it's hit the bottom, and you're going to figure that out because you're going to be using multiple time frames, and you're going to have relative certainty that when you find a bottom, or when you start to bottom on the daily and the weekly, that hey, maybe you're going to see a signal on the monthly like Bitcoin here back in April of 23, and this is the first time you've seen a sell signal since then. And when you're in early like this, well, then all this kind of drama up and down becomes manageable and less stressful, because you actually had an early entry from a strategic point of view. Not just throwing money at the wall hoping that some of it sticks. I can assure you most of it won't, if that's the approach. Because the days of getting lucky are coming to an end. So for those of you that are uncomfortable making short trades, get comfortable making short trades. Because nothing goes up forever, nothing goes down forever. But when the wind blows in a different direction, you need to be able to monetize the chart. And, you know, what's been happening with a lot of people is that they're not used to this kind of constant downward pressure, right? And they think they identify these opportunities on shorter time frames, like we've shown, and then they don't materialize. Well, if you're using this kind of methodology, I don't care what the time frame is, there's a 30-minute chart. Do we get an example of price riding up and down? Like, this is really volatile charts, but yeah, you do, right? Shorter the time frame, the more noise there's going to be all the time. These are the ones you want, the runners, guys. Hey, you can decide what you want to do here. There's a decision to be made when you get to resistance, but when you're in up here as a short, for example, you're not too stressed out. You're like, okay, first time touch after failing. You know what? It's probably high probability of it failing, so let me see what happens. Boom, fails. Hey, I was right. Revisiting again. There's your first buy signal. Maybe now's the time. Or this big impulse move down and then you start creeping up. Sometimes that's a clue, but nevertheless, you have a signal to tell you, to keep you out of, again, keep you, hopefully prevent you from getting hit by something you didn't see coming. Here's Zcash daily. At some point in time, you know, as you're, you know, going parabolic, you're going to come back and test certain levels. Like, these are things that we automatically expect to happen, right? And just because it doesn't make you a bear suddenly because you want to trade it short. Like, this is a massive, incredible trade to the upside, and for those that got in on it, that's awesome, right? But when price pulls back, it's kind of interesting to know, or more than handy to know, where it could be going. As long as that divergence is down like that, this is all your money, right? All of this, you probably would have been in up here, but all of this is yours. And you're then, okay, when do I get out of my trade? That's what we want to know. When do I buy? When do I sell? First off, once you're in early and you've built some serious ROI, you're going to be a lot more relaxed and a lot more clear-headed when you're thinking about when you take money off and when you're setting those targets. This down here was the insurance that you paid, you know, to be kicked out. You probably would have taken it on this candle, but nevertheless, that's your buy signal. So you could say that all of this was yours, and that's the insurance. When you look at this chart, it's just like your kind of first attempt to the 50, right? Since failing it, we talked about this last week or two. There's your failure. This level here, basing these big candles and cutting through is all we're doing, was trying to create a level, right? Well, this level was essentially the area where this thing kind of topped out and started to roll over. But it's still hasn't broken the 20. This just could be simply, you know, a big move up, just 3 green candles in a down. These are 3 red candles in an uptrend. This just could be, is this the first touch of your 20 MA? Since you broke out of it, yes. High probability of finding some support and possibly a bounce. So this just could be move up, come back, tag the 20, bounce, and take another run at the 50, you know, which you hit 3 times a couple weeks ago. And then just it's that whole rinse and repeat thing. Now you're doing the testing to the upside, right? Wanting to get into this gap so that you can reach the point of control. Rinse, repeat, rinse, repeat. Look a little noisy. Does that make it look a little more simple? Yeah. Like, even with all of these massive sell candles, we never broke Like this divergence is still intact to the upside, believe it or not, right? There's your buy signal. You haven't changed trend. And this works, guys. Like, pay attention to this, because whether it's on a 4 hour, a 1 hour daily, or a 1 hour, it doesn't matter. When you see this and the trend is still, the trend is telling you that it's still intact, even though it's pulling back, but there's so much divergence that it holds, still bullish. And it's one of the things that helps us from getting faked out sometimes. Like, even if I was looking to buy, like seeing this, right? Like that, like this didn't break down. It sold off a bit, created opportunity for you, but it didn't break down. In fact, you didn't even find the 20. So it's still a very bullish chart. Yeah, it's gotten selly, but I mean, it's still bullish. Like lots of opportunity to the downside, yeah, but I mean, it's still a bullish chart. And look at the volatility in Bitcoin. Like, we were down 1,200, then down 4, and then down 1,000. Now we're down 5. And that's the noise that confuses everybody, right? That intraday, daily stuff on what comes next. When it's all we got to do is zoom out, right? The daily hasn't given us any signal yet. We know what our resistance is above. Don't front run the chart. People are gonna feel what it's like to go through a lot of resistance that they haven't felt in a while. Whether you feel it at the 5 first, or in here at the 20 or the 50 or whatever, you're gonna feel it. And it's not an easy ride up, right? It's gonna be bumpy. This is not gonna be, I don't think anyways, the parabolic shift to the upside. There's a lot of resistance here, and we might get big parabolic moves, but I mean, they could also get retraced just as hard. XDC is one of those privacy coins, or sorry, the ISO coins. But when you look at the chart, is it quite a clean chart? Yeah. Right. Gives you clean signals on buying. This is a weekly. So you get a green signal on this green candle right at the 20-day moving average, a major moving average. Yeah, you're going to take it. And boom, divergence opens up and price goes parabolic. And, as typical in crypto, we end up with these big train tracks at a top, and then the beat goes to the downside. Even through these candles here that went sideways, testing the 20, the divergence to the downside never broke. Price goes down, right back down to the 200. Bounces, but a clean move down. Like, again, this is a green candle, but it's just a green candle in a downtrend right now. There's a lot of divergence here, which means there's still momentum. That's all it means. And when we look at the volume profile, the fact that we've broken through the 200 a little bit, there's your lower value range. I wouldn't be surprised if we find those levels or less. What's Pepe? That's something I haven't looked at in a bazillion years. I think the chart's pretty failure of the 50. 2 equal, this actually does become a double top in here. So you have these 2 equal points in price, and there's your center, right? Price breaks down, creeps below that center channel, and that's a confirmed double top, which is bearish, right? And then you get this move. But this is where it all kicked off. It's the failure of the 50. Can't break through the ice, right? Can't break through the ice, you're drowned. And there's still momentum here to the downside. None of these candles have even tested the T line. This is like impulse down, sideways. Is there another leg down here? I don't know. It's possible. Apple, you monster. Well, I guess we got support from the 50, at least for now, but that's what looks like it's happening. You get it from the 20, now you're getting it from the 50. If it doesn't hold, fall into this gap in light trading, and that's where things can get really sketchy. And this is on the daily, actually, not even the weekly. I thought it was the weekly for a minute. It's not. Here's the weekly. There's your 20 at 257. What's 257 on the daily? Well, 254 is the 100 MA right in here, so it's not too far off. So you fail, you come back to the 20 on that weekly chart, and that represents this move to this level on the daily chart. Interestingly enough, you've got this volume gap up here, and this bottom shelf is in line with that level. And these are the kind of things that we just overlay on top of on top of the information that we have. This could just be, this is the first breakout of the 20 here on the weekly, and you haven't touched it since. So if it would pull back to this level, to 56 or 7, whatever that was, it would be more inclined to what? Catch a bit of a pause or a bounce. Right? If it breaks, well, then we know it breaks and looks for the 50 to the downside. But if it bounces, then it starts to do what? Just kind of like gold did, right? Came back, tagged up, and took out the previous wave's high. That's the upside potential. The downside we spoke about, I don't think there's much chance of it going sideways. At least not right now. Does that make any sense? I think it does. At least for me it does, right? Following the chart is a whole lot easier than trying to front run it. And I'll be honest, when I was younger, that's exactly what I did, right? I was always trying to find the earliest possible entry I could, because, aren't we, that's the job, right? That's what we're supposed to do. But it was not, right? Reading price is one thing. Reading price while being on the right side of trend is another, and understanding the fractal element of what we do. Right now, this is United Health, and obviously this was a big drop, and slowly it's started to regain a little steam. You can see you didn't quite make the 200 here, you didn't quite make it here either. That's a failure of the 50 right in here. But okay, we can't take away a ton. Here's the lower value range, or sorry, the POC. So yeah, here's our failure of the 50, kicks off a sell signal. Price is probably drawn to that level. But what does it look like on the weekly? Because we got to take some of this noise out, and it helps us gain some context about what's going on the longer time frames. So on the weekly, after the big sell-off, you've been able to finally regain the 20 back here, but really couldn't get any meaningful trading above the 500 MA weekly. And the 500 MA weekly is going to represent years and years, like decades of time. So when you start bumping your head on those levels, right, that causes, attempt, fail, attempt, fail, attempt, fail. The likelihood of, just like on Bitcoin, how you couldn't break how we couldn't break the 500, and then price broke through down beneath the 20, and then the 20 was the resistance, and price was reacting the same way to that level as it did the previous one. That's kind of what's going on here. But we are got our sell signal last week, and this weekly candle, albeit green, is all it did was wick the 5 and run away. So that's not necessarily bullish, right? But this is just 2 weeks under that sell signal. What does the longer term chart, the monthly, look like? Because it's going to take out all the noise. this big move down and the push up higher, is all that bought you was a monthly wick test of the 100 that completely failed and closed well below the T line. So if we were looking at this chart on an hourly or a 4-hour or any other time frame that we've looked at, what's that setup? That's the start of what looks like it could be a failed breakout. Look at all this divergence to the downside. Right? We've showed this exact same setup today about 5 or 6 different times on various different time frames, and here it is on a monthly chart of a highly traded stock. Does it not look like perhaps that's what we're doing? We're going to come back and take out that previous wave's low? Yeah, we're still working under the same sell signal on the monthly from February of earlier this year. And if we come back after this being a failed breakout and we take out the previous wave's lows and time and price have an opportunity to come together, is it unreasonable for us to think that we would test the 200 again? Be the first time since 2009 on this time frame, but would it be unreasonable? No. It is never unreasonable for price on any time frame to come back and test those levels. Everything is fractal. Just might take more time, but everything is fractal. And the point of showing this is that the monthly trend never changed. Never changed. And, you know, I've always felt that if this downtrend continued, and even these green candles, by the way, are just green candles in a downtrend, if it was to continue, take out this low and possibly find the 200, there's just a bit too much back here that have punctured this area to not be ignored and put it in play, and that's $200. Now, I'm not saying it's going to stay there. It could just simply be a wick and then boom, price moves on. But so far, our point of view is not invalid. Not for me. Now, you break through, if you were to break through here, that 100 on this time frame, that probably would have been enough to change the trend significantly and get back into this gap. But we know, right, that when we get into these gaps, price can move higher real quick, and this thing just wanted nothing to do with it. So this is going to be interesting, and it's going to take a little bit of time to figure it out, but I don't believe that I've been invalidated yet. This is just breaking one level, finding the next level, and then going through the process of testing those support and resistance levels. And the only thing that will invalidate a thesis one way or the other is just more or less money, depending on what side you're on. Right? More money is going to make price go higher, and less money is going to make it move south. And guys, if you have any questions, don't hesitate to ask. Let's look at JP Morgan, because this is something that sold off a couple weeks ago, and everybody thought it was the end, and it's not. Right now, this is a weekly. I could back it up to the daily. Let's wait for the internet to catch up. There we go. See this move here? So you get fail this level, found the next level, failed this level, found the next level. Did you fail this level? Right, we didn't. We bounced, and we moved up, and we did what? We took out the previous wave's highs on this wave. So you pull back again, get a little more love from the 100 MA. Price moves up. Even this pullback got some support, but here you are again, and now you've taken out this level. Just level by level. Rinse, repeat, rinse, repeat, rinse, repeat. And, you know, again, it's like the race car driver, right, that sits in the cockpit before the race starts, and they drive the race in their minds, right? And they just are able to feel and anticipate, every move on the track. And that's kind of what you're doing, right? You're just listening to the chart and following the track, right? Price is going to show you the direction that it wants to go. And it's going to give us clues, on what it wants to do. This is the weekly JP. There's your 50. Obviously, you pierced through it quite heavily, but snapback, right? This is the impulse down. This is the snapback that you hope for, as opposed to impulse down and then sideways, right? When you get the impulse down and the snapback up, that has at least some bullish intentions. They don't always break through as this one did, but at least the intention is there. When you get some of these things that just have this impulse down, and then you get a bunch of sideways dojis that go nowhere, and then they wait for the 5 EMA or the T line to catch up, and then the trend down continues. There's a real big distinction between what that setup and this. And here you are again getting a continuation off the 20. So still a bullish chart. Downside risk speaks for itself. Little chance of it going sideways. If you guys don't have any other questions, we can wrap this one up for today. I have a feeling that we're not going to be around. I don't know, maybe we will on Thursday. We will see. I doubt it. But you know what? Everybody deserves a break, including all of you. So I hope you take time with your families and your friends and enjoy some downtime and collect your thoughts and get ready for the new year. And I can assure you, it doesn't matter if price goes up or price goes down. I'll be here to help you monetize the chart. That's all this is about. It's just monetizing the chart. And you do it long enough, you're going to realize that you're onto something special that has the ability to change how your daily life looks and feels. So take some time for you, take some time for your families. Don't forget that the script, you can earn your script. Just get on those exchanges that we talked about back here from our post, and you can connect through those links. Do your volume over that 30-day period, and you'll get your script fee refunded. So this isn't a place where we're asking you to pay for everything. Everything that we do is pretty much no charge, with the exception of that script. And here's a way to help you earn it back. So I hope you guys have a great holiday if I don't talk to you before the end of the year. But take care, and I'll let you know when we're back on air. So have a great day, everybody. Merry Christmas, Happy